The stock market's back up today. Everybody should be happy about that, right? Yes, but maybe also a little bit concerned. And so I'm going to give you some reasons as to why I think the stock market isn't here to stay at these levels coming up. What's going on, guys? Welcome to Own the Chaos. My name is Brad, and this channel is specifically dedicated to helping you be your own boss. And what I mean by that is, through investing and entrepreneurship. So if you want to learn how to take control of your life, whether it comes to investing or whether it comes to, running your own business, then this is the channel for you. I have several videos throughout the week that I put out as it relates to investing and trading in the stock market, as well as Stock Watch Sunday at 8:30 p.m. Eastern Standard Time. And then I also have a barcast that I put out at 4 p.m. Eastern Standard Time that revolves around just my journey as an entrepreneur with my business partner, Christian. We're having a blast doing it. You guys have responded really well so far, and I'm excited to keep that going too. So if this is the first time visiting this channel and you want to see more content like that and learn how to be your own boss, I suggest that you give this a thumbs up and subscribe to this channel. Hit that notification bell so that you get alerted every time I put up a video. So on to today's topic. The S&P 500 has surged up over the last several days from its lows. The Dow Jones is now up 1,000 points as well since those lows. And so everybody should be happy again. The stock market's coming back, right? I don't know, and I don't think that it is. I think what we're experiencing is what's called a dead cat bounce, and I'm going to explain what I mean by that on the chart over at WeTradeHQ.com. And then I'm also going to show you some geopolitical issues that are going on around the world that might impact the market negatively, and some things you might want to consider when it comes to your own investments moving forward. So let's get to it. All right, everyone. So here we are over at WeTradeHQ, which is the platform that I have built with my partner, Jake. And I am searching for SPY here. You can go up here and search for your favorite tickers on WeTradeHQ.com. It's all absolutely free to talk about them amongst your friends and just kind of, get other people's perspectives. It's a great community to be a part of. I highly encourage you to join it. So having said that, looking at the SPY here, you can kind of see how it had a major gap down earlier last week, and that it started to continue to climb. But I think that this is what we call a dead cat bounce. We still have this resistance at 295 to beat here as of this video, and I think that it might struggle there. But if it does break that, we could see a little bit more of a move. But I don't think it's going to last. And if you don't know what a dead cat bounce is, just think of it. What was the last cartoon you watched? For me, when I was younger, it was, the Road Runners, the Wile E. Coyotes. Wile E. Coyotes chasing Roadrunner off a cliff. He falls down the cliff, and then he smacks down on the ground and then bounces back up, but then comes back down on the ground, and, Wile E. Coyote is done for. So having said that, that's what we experience in the market all of the time. When you see a sharp decline, just like we saw earlier, you'll see this, and this is a really good example of this. So back in October of 2018, you can see how there was a really sharp decline. It started to surge back up before it really just started to come back down, and then it came back down even further. So this is what we would call a dead cat bounce, as it relates to SPY, which again is the S&P 500 ETF. You can see how it really tried to come back, tested this resistance several times, and then just couldn't stomach it anymore. It came all the way down, crashing down. The good thing is that I would never bet or short against the U.S., and it eventually came back. But this is really tough. This is a really tough situation to be in if you're, way up here and you think that, the stock market's coming back. But indeed, it in fact was a dead cat bounce, and I think that's what we're going to be experiencing here as well. This was a significant gap down. And so I think what's happening now is that the gap is filling, but I think after this gap fill, it's going to continue to come down, maybe even as far as 273. I'd hate to be the person that says the sky is falling, but 236, maybe that ends up happening again. I don't know, but I do know one thing is that the stock market is well overdue for a correction, and that is definitely going to be happening very shortly. Now, as far as the geopolitical landscape goes, the reason that we're seeing a surge in the stock market today, on top of the fact that it looks like a dead cat bounce on the chart, is that the stocks reversed from early losses and soared after the United States removed some items on the list of the China tariffs and delayed tariffs on others, according to Business Daily. This is coming on the heels of a report that says on Monday night, thousands of protesters occupied Hong Kong's international airport, forcing cancellation of all incoming and outgoing flights. Beijing State Council Office for Hong Kong and Macau Affairs said shortly after the occupation began that it detected signs of terrorism in the protests and warned the situation had reached critical juncture. Now, if you've been paying attention to any of this or looking at anything on social media as it relates to these riots, it's really bad over there in Hong Kong. The airport has been shut down. It's just really, really terrible stuff. And so, to add fuel to this fire, along with increasingly strident rhetoric, Beijing has encouraged conspiracy theories now popular within China that the protests were instigated and funded by the United States. In a second press conference last week, China's office in Hong Kong blamed external foreign forces for the protests, citing several meetings U.S. leaders had with Hong Kong pro-democracy advocates within Washington this spring. Now, if you don't think that those tariffs were lifted because of those accusations, then you probably live under a rock. I'd hate to admit it to you, but this is a conflict that keeps intensifying, and I'm really concerned about what it might do to the market. This is the perfect storm. The market is at all-time highs. It's very overextended if you're looking at it from a technical perspective, and this thing going on with China could be very, very dangerous and detrimental to the economy, to the markets, and so this is why I am concerned with that. Having said that, I put out a video several months ago regarding the geopolitical issues going on around the world and some things you might want to consider investing in outside of just the overall stock market. And so I'm still standing by that. If you look towards precious metals and gold, I think that's going to be your ticket because of what's going on here between the US and China. These little things that people aren't paying attention to are going to surface, and then all of us that are looking at this and actually paying attention are going to be, I'm sorry about what's really going on in the world, but I kind of told you this was going to happen. So maybe nothing happens. Maybe this is just some BS that goes on and it all fizzles out and the markets are fine, but wouldn't you want to protect yourself? And so just consider looking towards precious metals. And actually, I've looked as well. I'm not one that would be trading Bitcoin or investing in Bitcoin or anything like that, anything crypto related, but people are gravitating towards that as well. You can look at BTC, you can look at gold. This is where people are going to, because that's what's the most secure in issues of conflict and the overextension of the market overall. We are well overdue for a correction, and so that's why you're seeing a lot of people going to these precious metals, and that may be something that you want to consider moving forward. I'm really not trying to be all doom and gloom here, guys, but I think it really is a reality that we do have to face and at least have to prepare for. Like I said, maybe nothing comes of this, but I think that it would be very smart for you to at least try to protect some of your assets if you're just into regular investing. I myself have also been trading a lot of gold related stocks as it stands today, and so I think it's just the smart move as it stands right now. If anything changes, you guys know that I'll be here to let you know, and that is it for me. So if you like this video, I certainly would appreciate a thumbs up, and let me know your thoughts. If you think that I'm completely off base here, or even if you agree and you want to add to some of the sentiments that I've put out here for you today, then leave some comments down below. I really want to hear from you. I read all the comments and I even respond to them as well. So definitely leave those down below, and I will definitely get to them. So that's it for me, guys. Thank you so much for tuning in. As always, I will see you all before the bell, and B Smith is out.